Hello everyone, I'm Shannon Morrell with Tax Analysts. Thank you for joining us today for the latest installment in our weekly discussion on tax reform. Now, ever since the elections, Washington, D.C. has been obsessed with this idea of possibly enacting tax reform legislation. And as we know, that effort is still a work in progress. It'll take many months to really figure it out. But it's safe to say that the emphasis will be on tinkering with our income tax system. However, there's an additional set of federal taxes that are arguably just as important, although they get far less attention. I'm speaking of payroll taxes. Now, for many American households, the payroll tax burden actually exceeds our income tax burden. So thinking back to the comment that presidential candidate Mitt Romney made several years ago about 47% of Americans don't pay any taxes, implying they have no skin in the game. That's accurate, but only as far as income tax goes. It's completely ignoring the payroll tax. So today we want to give some justice to the policy issues that really surround this very important payroll tax that we all pay. So let's get to the bottom of this. And to help me with that today, I am joined by Joe Thorndike, the director of the Tax History Project for Tax Analysts, a renowned tax historian and a regular contributor to Tax Notes. So to start it off, Joe, what exactly are the main payroll taxes and the applicable rates? What are the income caps, and who really pays these taxes? Is it the employers or is it the employees?
Right. So there are two principal federal payroll taxes. The one that most of us think of when we talk about it is the payroll tax for Social Security.
Sure.
There's also one for Medicare funding. And then there are other smaller ones, including one for federal unemployment.
Okay.
But the main one is Social Security to start with. The tax rate for Social Security is broken into two pieces. So you have half of it paid by workers and half of it paid by employers. Together they total 12.4%. They're divided equally. Now the interesting thing about that is that most economists don't think that the employers actually pay that tax. They think that at the end of the day, that tax is passed on to workers in the form of lower wages. So you would make an extra 6.4% or 6.2% if the employer didn't have to pay that. That's the theory. So in general, 12.4%, which you and I are paying for Social Security. You only pay that on the first, I think this year it's $127,000 of wage income that you earn.
Okay.
Doesn't apply to, trading gains from the stock market or anything like that. This is money you earn because your employer cuts you a paycheck. And it's only up to $127,000. If you're an extremely well-compensated lawyer and you're making $250 or $2.5 million or something like that, you don't pay anything on the amounts above $127,000.
Got it.
So that's a quite distinctive aspect of this tax. The Medicare tax, by contrast, is 2.9%, also split evenly between employers and employees, also passed on, according to most economists, to the employee level. But there's no cap on the amount of your wage income for the Medicare tax. So that makes it somewhat more progressive.
Sure. Okay, thank you.
Mm-hmm.
So is it fair to conclude that most Americans have a high degree of tolerance for the payroll tax? You really don't hear many people complaining about them. And so if that is so, why is that? Is it because, in reality, the rate structure for it is regressive, and I don't think that's something we would really be okay with if that was our income tax. Generally, that structure is progressive. So what explains the noticeable difference between these two systems?
Right. So, all right, to start with the popularity question. As a general rule, the tax is really well tolerated. When they do surveys over time of the worst tax, right? They ask Americans, what's the worst tax you pay? And almost always, the local property tax wins that.
I can see that.
The personal income tax comes in a close second, but the payroll tax, the Social Security payroll tax, is not in the running really for the top spot.
Mm-hmm.
People don't like it. You can find 10% of the people who don't like it, who think it's the worst or whatever. But for the most part, even though everybody pays it and they pay it on their first dollar of income, if you earn just $5 a year, you're going to owe something. People don't hate it. The reasons for that are hard to tease out, actually, and I think we can talk about this in a variety of different ways. But I think the short answer is because the close connection between the tax and the benefit program makes the tax more tolerable.
Okay.
People really see, I think, a value for money, a value proposition in the Social Security tax that they don't necessarily see with other taxes. Plus, it's taken out of their paychecks automatically, as opposed to, say, the local property tax, which sometimes you have to write a big check for, unless your mortgage company's writing a big check for you. But I think that's why. The why is a regressive tax popular? I think so. Partly, we have to think about why it's regressive. So, it's just a flat rate, right? It's 12.4% total. That's not regressive in and of itself. What makes it regressive is that $127,000 cap. So at that point, people aren't paying any tax on the money over that. That means if you make $127,000 this year, you're going to pay 12.4%. Okay. But if you make $1.27 million this year, $900 some odd thousand are going to be tax-free. That turns the curve around, right? So that's a flat rate for a long time, but then your average rate starts to drop after that because most of your income is not being taxed. People don't seem to be particularly up in arms about that. They've never really been particularly up in arms about that. People, I think, accept the justice of this program. We all contribute. We all make us 12.4% payment, and that's a much higher number, incidentally, than it was when Social Security started, when it was in the single digits. But people, I think, can accept a proportional tax and even a regressive tax if they feel like the program it's funding, shared by all, paid for by all. I think that's the political talking point behind it. That
makes sense. So in terms of tax administration, you want to see that taxes have a high rate of compliance. No one wants to think that they're the only ones playing by the rules. And payroll taxes do it right in that arena. It's very difficult to cheat on your payroll taxes because each successive payment is taken automatically out of your paycheck. So you could argue that that's really the gold standard from the standpoint of enforcement for taxes. So should other federal taxes be structured that way?
So the payroll tax is really difficult to avoid. In fact, the problem with the payroll tax comes with the employers who collect it from their employees and then don't submit it to the government. That's the bigger problem. But that's not a big problem. This is actually, compliance is very high. I think that, generally, just to touch on tax compliance more generally, what you see is that taxes where a third party, not the taxpayer, not the government, but a third party, like an employer. Okay. Taxes where an employer are doing the collecting, those get great compliance rates. And also, if they aren't even doing the collecting, but they just report that income to the government, lots of people have gotten 1099s or something like that. As long as somebody else is saying, hey, by the way, I sent Shannon $500 last year, your compliance level tends to be very high in that situation, because if you don't comply, if you don't note it on your income tax return and make the payment, you'll hear from the IRS. They have this matching program where they match up the 1099s with your return. If they don't work all that, then they will get in touch with you. What they find is that for situations where taxes are collected and reported by a third party, compliance is like 99%. It's really good. And so the payroll tax certainly in that category. In situations where people are not getting third-party reports, where, let's say you're mowing the lawn for your next-door neighbor and they're handing you cash, then the actual compliance rates can drop as low as like 50%, the range of 50%. So take what lesson you want from about the morality or ethical standards of American taxpayers. The truth is that we're very good about paying when we really don't have any choice. We're less good about paying when we think we might be able to chisel our way out of it. Could other taxes be structured that way? I think that's hard, because the reason it's easy to put a payroll tax on this sort of a basis is that it's the same for everybody, right? Mm-hmm. We're going to take 12.4% of your income in Social Security taxes, regardless of who you are, regardless of how you spend your money, whether you have kids or own a house or give money to charity. None of that matters. We can just take it. It's just a simple math calculation, so it's really easy to automate that sort of thing. The income tax, for instance, which is the one where we all know what a pain it is to collect and where we have compliance problems, you can't really just set it up that way, because if you own a house or you make charitable contributions or you earn your money, say from day trading in the stock market, all that changes the way we calculate those numbers. Withholding in that situation, while not impossible, is hard to get, and basically impossible to get precisely right. Sure. So I think the answer is, you can't really you could never really approach this level of perfect compliance with an income tax. You get closer with a sales tax, which is sort of the same way you would be pretty close with a value-added tax, another kind of sales tax. But for the ones that we know in this country, and particularly the income tax, it would be basically impossible to structure it this way. Not that it couldn't be closer. We can do a better job of estimating how much people are going to owe and then withholding that, but we'd never get it perfect.
Okay, that makes sense. Just a lot of variables there.
Yeah.
So here's a hypothetical question. Let's have a little fun here. Say we were to change the federal tax system tomorrow so that the programs like Social Security and Medicare are funded by general tax revenues. So there's no dedicated funding source. It would follow that the payroll taxes would then be eliminated, and there would be no burden of financially supporting those programs would be added to our income tax system. So in theory, we could do that. That's kind of an obvious, question for the novice observer. But why even bother with distinct payroll taxes? Why not just lump everything together?
Well, as it happens, that was an active discussion when they created Social Security in the 1930s. A lot of people said, look, we should fund this new program of retirement benefits. And they created it because there were literally old people starving in the streets in the 1930s. And people said, look, we can't have this sort of situation. We need to provide some sort of financial support for them. And a lot of people, a lot of experts in the development of social programs, and there were some in the 30s, just as there are today, said, look, we should just fund this out of general revenues. We've got this progressive tax system, and it's great. We're going to support poor people, and we're going to do it using a progressive tax system, which will distribute the burden of supporting those poor people according to how much money you make, And if you're poor, you won't have to pay a lot to support other people who are poor. It made a lot of sense to everyone except Franklin Roosevelt. And it turns out that Franklin Roosevelt was the only person that mattered in that situation because he said, yeah, not going to happen. I want a payroll tax. I want a flat rate tax that everybody pays. He liked the idea of thinking about Social Security as an insurance program where you would pay into it while you were young and healthy. And at the end of the day, you would get this payout, which would be like the insurance payout. The insurance model. It isn't really an insurance program in any meaningful way. But he liked the idea of casting these as premiums, essentially, that you paid for an eventual product that you had bought and paid for already. So he insisted on a regressive payroll tax. That begs the question, well, why? I mean, Franklin Roosevelt, why did you want a regressive tax? And that answer, there's never been a perfect answer to that question, but there's a pretty good one. And this is my favorite Franklin Roosevelt tax story. It all comes down to something called the Luther Gulick quote. This is a guy who is talking to the president years later, after Social Security has already been created and has been on the books for a while. And they're talking about Social Security and how it's funded and how it operates and everything. And he asks him about the payroll tax and why do we have this payroll tax? And Roosevelt says, and I'm paraphrasing here, but he says basically, I put that in there so no one could ever take this program away. Because people will have bought and paid for it, right? They will have paid money in and they will own this program and they will never let it go. Now, did he really say that? It's a third-hand quote and not hard to know, but the reason I think he probably did say it is because it also happens to be true. It has the benefit of actually describing reality. I think the payroll tax has protected Social Security from its critics for 75 years or however many it's been since it was created, because people do have that sense that it's my Social Security. When people feel this way about Medicare too, and it's less true of Medicare. It's not fully true of Social Security even. You put in less than you get back. It's kind of a good deal for most people. Medicare, you put in even less than that and get a lot back. But people still feel because they make these contributions that they own the program. And that's why when the Tea Party revolt happened, they would have, at some of those town hall meetings, there was a famous comment where somebody said, I want government to keep its hands off my Medicare. And of course, Medicare's a government program, but people feel that it's their program. And I think that is the political function of using a payroll tax to fund it. Yes, the system would be more progressive if we used general revenues and income taxes specifically to pay for it. But Roosevelt felt that was a reasonable sacrifice to make for the sake of protecting the program from people who didn't like it. And I mean, there's now decades and decades of evidence to suggest he was right about that.
Absolutely. So let's talk a little bit more about that. they've been around for so long, so longevity is really their greatest strength, these programs. Yet there are other public spending programs, and the first one that I think of is, because it's most recent, is the ACA, that really aren't doing so well. I mean, President Obama's been out of office for, roughly 100 days, and it's already in the political throes of being, dismantled. So really, is there anything in your opinion that, President Obama or possibly Trump could learn from Roosevelt about the way these programs are funded and how they've been able to stay around for so long?
I think the issue with Obamacare, the ACA, is that both the program itself and the way it was funded look different than previous entitlements. So, Social Security goes to everybody. If you're poor, you get Social Security. If you're rich, you get the same Social Security. It's a program. It's a universal program. We don't means test it. The problem with Obamacare in terms of the program design is that while there were benefits for every person who uses health care and who has health insurance, and some of things like the bar on discriminating based on pre-existing conditions, I mean, that's something we all benefit from, or being able to keep your kids on your personal insurance policy until they're 26.
Yeah.
But most of the benefit from Obamacare went to people who were previously uninsured, who were poor, who needed financial support from the government in order to buy Obamacare policies. That's where the real improvements were made. That's the real value of the program, is that we took lots of uninsured people and we made them insured.
Yeah.
So that's not a universal program. That is a program that's designed for poor people in need. Okay, maybe that's good. We have other programs like that in our federal government. But the issue also is that we chose to fund that, at least in part, by taxing rich people. We have special tax on investment income. We have special taxes on things like medical devices, on tanning salons, on all sorts of weird things. But what we didn't have was a broad-based tax that everybody paid, like the payroll tax.
Therein lies the difference.
And so I think, it's what protected Social Security, universal program with a universal tax, the value proposition is clear, right?
Absolutely.
I bought it, I paid for it, it's mine. It's not entirely true, but that's the sales point. And Obamacare never had that. Rich people are paying for it, poor people are getting it. The rich people are mad because they're paying, and they have very little stake in the program at that point, and they feel taken advantage of. Now, you might think they should be paying, right? They're rich, they can afford it. They're poor, they need the money. Fine, that's a reasonable political point to make, or moral point to make. But the political problem with that is that you have a very aggravated minority of people paying the taxes, and you have a less agitated group of people receiving the benefits. Now, it turns out, as we've seen in efforts to repeal the ACA, that those beneficiaries may actually be pretty agitated. Yeah. But what they don't have is they don't have that claim, hey, I bought and paid for this. That's, I think, a weakness in Obamacare. It's a weakness by design. They intended it to be that way. It makes the program more progressive as a whole. But I think it lacks the sort of locked-in political security that the payroll tax gave to Social Security.
Thank you. So thinking about possible tax reform legislation, would you say it's safe to assume that the payroll taxes are off the table? What's the likelihood that members of either political party would want to adjust the rates or the caps?
There's always lots of talk about changing something about the financing of Social Security. Sometimes, because the program does have a deficit if you look down through the long term. There are a variety of ways that you might close the gap. But there are always proposals out there. Frequently on the left, among Democrats, you'll hear proposals to lift this cap, this $127,000 cap, to make it higher, or to just remove it entirely, like it is for the Medicare tax. That's one possibility. Would make a system more progressive. Sure. Would raise a lot of money. It would also be a big tax increase on rich people. So that could happen. I think under if instead of a unified Republican government in Washington, we had a unified Democratic government, I'd say that was much more likely, maybe even probable, that the cap would be raised somewhat. Okay. It's anybody's guess how that goes now, but I don't think it's going to happen anytime soon. Would we ever roll the tax in, get rid of the payroll tax and change our funding mechanism to make Social Security, to fund it through general revenues? Well, again, I think Democrats will object to that because the success of the payroll tax in protecting Social Security has not been lost on anyone. and I think that Democrats would see that as a threat to the program itself. That if every year we had to find a way to pay the bills of Social Security going forward and there was no payroll tax, there was no trust fund, I think they'd be worried that the program would start to lose some of its really rock solid political support. So yes, it's possible. There are plans out there floated for that sort of consolidation, but I don't think it's going to happen.
Okay. And so talking about those plans, there have been proposed plans to get rid of the payroll tax before. GOP presidential candidate Ted Cruz comes to mind. He favored a flat tax that would have completely done away with them. Mm-hmm. So what is the thinking behind these plans? What are they thinking? Do they think, oh, I found a better way to fund Social Security and Medicare? Or is the elimination of these payroll taxes kind of a sneaky way of killing those programs? In essence, you squeeze the life out of them by cutting off the purse strings.
I mean, I think how you answer that question depends on what your political priors are. Because, it's reasonable. As many of these lefty people in the 1930s were saying to Roosevelt, don't be an idiot. Don't fund a progressive program with a regressive tax. It makes no sense. There are still people today who would say that. So if you're a liberal and we got rid of the payroll tax and we rolled it into this progressive income tax system that we have, that's a win, right? The system gets more progressive. So you might find some Democrats willing to sign on for that. But I think in general, they are, like Roosevelt, committed to this compromise. We're going to use a less progressive tax or a regressive tax to fund it because it will protect it. And that's a compromise worth making.
Sure.
So, I mean, do some Republicans hope that's exactly what's going to happen? That if we actually have to pay the bills on an ongoing basis without the payroll tax, people will be willing to cut it? I'm sure that does motivate some Republicans. So I don't want to attribute bad faith to anyone, including Senator Cruz. I just think that both parties have plans afoot here. And the Democratic plan essentially is to make Social Security bigger, not smaller.
Okay.
To spend more money on it. And Republicans, as a general rule, more interested in reining it in because it's expensive. So I think everybody's pursuing their own ends. I still don't expect it to happen.
All right. Well, thank you very much for joining us today. I hope
pleasure.
you all learned a lot about the payroll taxes. They're very important. We all pay them. So thanks again, and join us next week.